right, ARM reportedly launching its own chip this year in a move that some say could upend the semiconductor industry. Shares are lower this morning. You see down about 4.2%. Christina Partsinevelos has been tracking the action, joins us with more on the chips. Hi, Christina.
Hi, Mike. Well, ARM finds itself really in an interesting crossroad right now. The company is known for creating the blueprints that others use to build computer chips, particularly CPUs, central processing units, which are really the brains of computing devices. Recently, there's been some buzz about a month ago that ARM was potentially buying Ampere, which is another CPU designer, which would let ARM start making actual chips instead of just selling the designs. On paper, this move pretty much makes sense, right? Because ARM already has the intellectual property, so why not build the chips themselves? But there are some major hurdles and challenges to consider. First, there's the money question. As Wedbush's analyst Matt Bryson points out, even with the exciting possibilities AI brings, the market might not be big enough to justify ARM's current valuation, which is quite higher compared to others. Even if ARM starts making CPUs for major data centers, they'd be jumping into a tough market where Intel and AMD are already well established and competing with each other constantly. They likely need to charge premium prices as well for their chips to make it worthwhile. But perhaps the biggest issue is how this would affect ARM's relationship with its current customers. So think about it. ARM would essentially be telling companies, hey, use our designs to make your chips, but also want to buy our chips that compete with yours? As Wells Fargo aptly puts, ARM would be giving up its neutral Switzerland position in the semiconductor world where everyone trusts them as an impartial partner. There's one clear winner, though, in this scenario, and that would be Taiwan Semiconductor, because they would likely become the manufacturer for these ARM chips, strengthening their position in the industry already. But you can see shares are down nonetheless, but they make a lot of chips for a lot of companies. Guys?
Well, for sure, Christina. It's interesting that ARM is thinking about going in this direction. It seems like for most industries or companies, the dream is to be like, let's get out of the kind of capital-intensive sort of asset-encumbered part of this business and just get paid for intellectual property. That'd be great, right? That's asset-light, probably higher return. So what are they finding that they're bumping up against that they would prefer to have their own line of actual chips?
Yeah, the description would be asset light, and you're right, because the premium for valuation is a lot higher. Overhead costs are a lot lower. For Intel, for example, they're building a foundry business, and over the last 3 years, they spent $40 billion. In ARM's case, I think it's because so many of these other chip companies, Qualcomm, for example, are using the IP to build these great CPUs, and eventually maybe they will no longer need that particular IP. So ARM is trying to position themselves in a market in the future where they're building the chips and everyone else is competing. Should OpenAI do so? The Stargate project we've talked about. You have Meta. You have all of these companies creating their own chips. So ARM wants to make sure that they're going to still be relevant in the future.
Fascinating. Christina, thank you for breaking down the order of magnitude for the semiconductor space right now.